A new law designed to make investing in stocks cheaper and more accessible has just kicked in. It's called the Capital Markets Efficiency Promotion Act, or CMEPA. So what exactly does it change, and how will it impact Filipinos looking to grow their money in the market? Jin Kim breaks it down.
The Philippine government has taken a major step to modernize the local capital markets, making taxes lower, rules clearer, and stock investing more accessible to everyday Filipinos. One of the most immediate changes, the stock transaction tax, slashed from 0.6% to just 0.1%. On a 100,000 peso trade, that's a drop from 600 to just 100 pesos. For retail investors, a significant saving.
In theory, it should improve volumes, at least over time. Lowering your transaction cost will allow you to actually trade at a healthier pace, right? Because you have a lower cost.
Brokers say this could encourage healthier, more frequent trading. It may also boost market activity, even without expanding the user base, simply because existing traders can now do more at lower cost.
So you don't need a larger user base, because that user base will now trade more, because they can now make money at a shorter period of time. So that's essentially what's happening here. So your current base can effectively double their trading. Now imagine if that base starts to make money, they start talking to other users, they start, flexing how much they've done in terms of the stock market, and that now can create new users.
But the law isn't just for traders.
So there's a reduction in the cost of raising capital. So some way, somehow, it's also going to ease pressure in terms of pricing, let's say IPOs.
The documentary stamp tax on original share issuances, such as those in IPOs, is now lowered from 1% to 0.75%. This makes capital raising cheaper for companies, potentially easing IPO prices and encouraging more listings on the PSE. But industry leaders agree, tax cuts alone won't fix the system. Only a small fraction of Filipinos participate in the stock market. Many are still unaware of the basics or simply don't trust the system.
Effectively, half your cost will be now cheaper. Matutuwa ka di ba? Mag-i-invest ka. Kasi mas may chance para kumita, mas may chance para palaguin yung pera mo, no? Ngayon, to a person na never invested, wala yun sa kanya. Ano ba yung 0.6, 0.1? Di ko nga alam kung ano, what are these costs? So, it's an awareness game.
Experts argue that financial literacy and awareness campaigns will be crucial, but education is just one part. Structural reforms remain a priority. According to brokerage firms, the next big fixes could come from adjusting minimum trading lots and allowing short selling to provide more market depth and liquidity. But others warn, lower fees and better rules won't mean much if the overall economy remains under pressure.
So policies that would help the economy in general, boosting productivity, boosting productivity in the country, making our country more investment friendly. I think these are the things that would, structural changes, things that would promote structural changes. I think these are the things that would be more beneficial.
The real challenge is reviving broader economic confidence.
Some way, somehow, the reduction in trading costs, the reduction in the cost of raising capital, it is going to help. But again, the bigger factor will still be the general economic environment. No matter how low trading costs or raising capital costs would be, if general economic sentiment is still somewhat pessimistic because of, let's say, risks and uncertainties, then investors' appetite for risky assets may still not be that much.
And finally, from the Financial Executives Institute of the Philippines, a clear endorsement for CMEPA. Jin Kim, Billionaire News Channel.